In July 2025, Bitcoin shattered every record in the book, hitting an unprecedented $123,000 per coin. But here's what most people missed. This wasn't another crypto bubble driven by retail hype or Elon Musk tweets. This was the culmination of the most significant institutional wealth transfer in cryptocurrency history, and it all started with 3 letters: ETF. Welcome back to the SwapSpace channel. Before we dive into how ETFs revolutionize cryptocurrency, let's quickly understand what an ETF actually is and why they're so powerful for institutional adoption. And speaking of powerful things, you can click a powerful like on this video, along with a comment and a powerful slap on a bell icon to be notified when our next video drops. ETF stands for Exchange Traded Fund. Think of it as a basket that holds assets. It could be stocks, bonds, commodities, or in this case, Bitcoin. Instead of buying the actual asset directly, investors buy shares of the ETF, which represents ownership in that underlying basket of assets. Here's why ETFs are so appealing to institutions. ETFs trade on regular stock exchanges during market hours. They're regulated by the SEC, and they have transparent holdings. And also, they integrate seamlessly into existing portfolio management systems that institutions already use. This makes them incredibly attractive to traditional finance. For Bitcoin specifically, ETFs solved the massive custody problem that had kept institutions away for years. Instead of figuring out how to securely store private keys, deal with crypto exchanges, or navigate the technical complexities of Bitcoin ownership, institutions could simply buy ETF shares and let the fund handle all the Bitcoin custody and security. The key difference between a Bitcoin ETF and previous Bitcoin investment vehicles like Grayscale's GBTC Trust is that ETFs can create and redeem shares based on demand, which keeps their price closely tied to actual Bitcoin price. This mechanism eliminates the premium and discount problems that plagued earlier Bitcoin investment products. So what exactly happened? January 10th, 2024 will go down as one of the most important dates in cryptocurrency history. After over a decade of rejections, delays, and regulatory battles, the SEC finally approved multiple Bitcoin spot ETFs simultaneously. This wasn't just another regulatory milestone, this was the moment Wall Street officially embraced Bitcoin and legitimized cryptocurrency for mainstream institutional adoption. For years, the SEC had rejected every single Bitcoin ETF application that crossed their desk. They cited concerns about market manipulation, insufficient regulation, and lack of investor protections. But when BlackRock, the world's largest asset manager with over $10 trillion under management, submitted their applications for the iShares Bitcoin Trust, everything changed. BlackRock doesn't just apply for financial products, they reshape entire markets. Their entry into the Bitcoin ETF space signaled to regulators, institutions, and to the broader financial world that Bitcoin had evolved from a speculative digital experiment into a legitimate asset class worthy of serious institutional allocation. The approval wasn't just for BlackRock either. The SEC simultaneously approved ETFs from Fidelity, Grayscale, Van Eck, Bitwise, and other major financial institutions, creating unprecedented competition for Bitcoin accumulation from day one. The numbers from the first few months after ETF approval are absolutely staggering. BlackRock's iShares Bitcoin Trust became one of the fastest growing ETFs in financial history, accumulating over 742,000 Bitcoin worth approximately $53 billion in just months. But this wasn't just retail FOMO. This represented institutional money flowing into Bitcoin at unprecedented scale. The collective impact was even more dramatic. In the first 6 months after approval, all Bitcoin ETFs combined purchased over 1 million Bitcoin.
I'm getting really into Bitcoin right now.
What made this institutional flood so powerful was the systematic nature of the buying. These weren't emotional retail investors buying during pumps and selling during dumps. These were pension funds, insurance companies, wealth managers, and institutional investors making strategic long-term allocation to Bitcoin as a part of their diversified portfolios. The daily flow data became market-moving information. When BlackRock reported buying 4,000 Bitcoin in a single day, the entire crypto market took notice. When multiple ETFs showed consistent inflows week after week, it created sustained buying pressure that individual whales simply couldn't match.
Killing millions
to save billions.
And the competition between ETF providers intensified quickly. Each fund tried to offer the lowest fees to attract institutional capital, with expense ratios dropping to as low as 0.19%. This fee competition benefited everyone holding Bitcoin, as it made institutional Bitcoin exposure incredibly cost-effective.
It's on sale.
Now that the operational complexity disappeared, replaced by familiar financial instruments that compliance departments could understand and approve, this accessibility factor cannot be overstated. Financial advisors who previously wouldn't touch Bitcoin with a 10-foot pole were suddenly recommending 1 to 5% Bitcoin allocation to their clients through ETFs. We witnessed Bitcoin's transformation from being considered digital gambling to being viewed as a legitimate portfolio diversifier in a matter of months.
It's legal now.
The regulatory comfort also played a huge role. These ETFs were approved and regulated by the SEC, overseen by established financial institutions, and integrated into existing market infrastructure. This regulatory blessing gave institutional investors the confidence they needed to allocate serious capital to Bitcoin. Now, the success of the US Bitcoin ETFs created immediate global demand for similar products. Other countries watched billions of dollars flow into American Bitcoin ETFs and realized they were missing out on massive opportunity for their own financial markets. Hong Kong moved quickly, launching both Bitcoin and Ethereum ETFs to compete for Asian institutional capital. Canada expanded their existing crypto ETF offerings, while European markets began racing to develop their own regulatory frameworks for cryptocurrency ETFs. This global competition created a network effect where each new market that approved crypto ETFs increased the legitimacy and demand for Bitcoin worldwide. And we are now witnessing the early stages of a global institutional adoption wave that transcended any single country's regulatory decisions. The international expansion also highlighted Bitcoin's unique position as a truly global, borderless asset. While traditional ETFs are often limited by geographic and regulatory boundaries, Bitcoin ETFs could provide exposure to the same underlying asset across multiple jurisdictions simultaneously. The ETF revolution fundamentally altered Bitcoin's market dynamics in ways that are still being understood. ETF flows became one of the most important price indicators, with daily inflow and outflow data moving markets in real time. The creation of permanent structural demand was perhaps the most significant change. Unlike individual whales who might panic sell during market downturns, ETFs represent long-term institutional capital that typically holds positions for years or decades. This created a new demand floor that had never existed in Bitcoin's history.
Supply and demand.
The systematic buying also reduced Bitcoin's volatility over time. Instead of massive price swings driven by individual wave movements, we began seeing more sustained trends driven by consistent institutional accumulation through ETFs. The competition for Bitcoin among multiple ETF providers created a supply-stock effect. With limited Bitcoin supply and multiple institutional giants competing to build positions, the fundamental supply-demand equation shifted dramatically in favor of higher prices. Fast forward to August 2025, and we have witnessed the possible culmination of the ETF revolution's impact on Bitcoin's price. Bitcoin shattered all previous records, reaching an unprecedented all-time high record of $123,000.
122, 123, 124.
Throughout 2024 and into 2025, Bitcoin ETFs continued their relentless accumulation, with combined holdings exceeding 1.5 million Bitcoin by mid-2025. This represented nearly 8% of all Bitcoin ever created, locked away in institutional portfolios with no intention of selling. The supply shock becomes undeniable. Bitcoin's scarcity had always been present, but ETFs made it practically visible. Every major dip was met with institutional buying through ETFs, creating a price floor that kept rising higher. The traditional boom-bust cycles that characterized Bitcoin's early years were replaced by sustained upward pressure driven by systematic institutional allocation. Now, what made the 123 peak particularly significant was its stability. Unlike previous Bitcoin all-time highs that were followed by dramatic crashes, when Bitcoin briefly touched 123K in July 2025, it didn't immediately collapse by 80% like in previous cycles. Instead, it consolidated around these levels, supported by continued institutional inflows and structural demand that the ETFs had created. The timing wasn't coincidental either. By July 2025, Ethereum ETFs had also been approved and were showing similar institutional adoption patterns. The success of Bitcoin ETFs had opened the floodgates for broader cryptocurrency institutional acceptance, creating a rising tide that lifted the entire crypto market. Looking at the numbers, it becomes clear that without ETFs, Bitcoin's journey to 123K would have been difficult. The institutional capital, regulatory legitimacy, and structural demand that ETFs provided didn't just contribute to Bitcoin's price appreciation, they fundamentally transformed Bitcoin from a speculative digital asset into a cornerstone of modern institutional portfolios. The 123K all-time high stands as proof that ETF's revolution wasn't just about making Bitcoin more accessible, it was about creating the infrastructure for Bitcoin to achieve its full potential as the digital gold for the institutional age. Here's how you can be a part of that success. The SwapSpace channel giveaway. You can be one of 3 lucky winners of $20. To enter the giveaway, you can like this video, comment below what you think led to Bitcoin all-time high record of $123,000, and subscribe to our channel for more awesome content like this every week. Good luck. The Bitcoin ETF success story is just the beginning of crypto's integration into traditional finance. Ethereum ETFs are widely expected to be the next major approval, potentially creating a similar institutional flood for the second largest cryptocurrency. Beyond Ethereum, other major cryptocurrencies are likely to follow the same path from regulatory rejection to institutional acceptance through ETF structures. When the world's most conservative money managers are competing to accumulate Bitcoin, the question isn't whether crypto will succeed, it's how fast the rest of the financial world will adapt to this new reality.